Now, for the first panel at Scale Summit, let's explore the future of rollups. Please welcome Misha Komarov of Nil Foundation, Brendan Farmer of Polygon, Luis Guthman of Starkware, and Alex Glukowski from Matter Labs. Moderating this discussion is Yuan Han Lee, principal at Blockchain Capital. Please welcome them to the stage.
Hello. Hope everyone's doing well today. Thank you for being here. I think, why don't we start off with a round of introductions? I think you can tell the audience a little bit about yourselves, what you're working on, the rollup you're contributing to. Yeah, I mean, Alex, do you want to start us off?
Happy to start. My name is Alex Glukowski. I'm co-founder and CEO of Matter Labs, the company behind zkSync, the creators of zkSync. And how many of you guys know zkSync? Can you raise your hand? So everyone knows. I'm flattered. We are a mission-driven project. We want to advance freedom for humanity, and we believe that blockchains are the best way to do it. And we are operating starting from these principles, and we are currently the most popular by volume roll-up on Ethereum overall.
It's like, I can do an introduction for Brandon because he drank something which made him transparent today. So, I mean, it's just, this is Brandon. It's like, he looks like this today. Whatever, let's go forward. I'm Misha. I'm, I don't know, bringing coffee at Nil. And just doing stuff at Nil, right? So Nil, like since November of last year, kind of got to that point when we feel confident we can bring long-promised sharding to Ethereum back without upgrading Ethereum. We call this thing zk sharding. So that's the thing. We try to prevent liquidity fragmentation and state fragmentation, like effectively of ETH. We try to prevent Ethereum state balkanization. That's what we do.
So, hi. Can you hear me? No. No. Thank you. Hi. So I'm Louis. I'm the head of strategy at Starkware, not the head of product. So Starkware, for those who don't know, is one of the leading zk company in the world. We invented some of the leading stack and technology that is powering the space at the moment. And we launched years ago, and even more recently, Starknet, which is the first zk rollup to come to production, and a zk rollup that tends to focus towards performance and optimizing for new use cases. And so, what can I say more? We've seen coming out from the ecosystem things like team building zkML, Advance, data Oracle, and all sort of new application or on-chain gaming. And so if you want to hear more, I'm happy to discuss it afterwards.
I think a great place to start today would just be talking about each of your visions for how you think we should scale blockchains, right? I think everyone here who's used any app on any blockchain realizes that we are not quite there yet in terms of UX and scalability. So I'm curious how you're all thinking about what the right way to scale blockchains is, your vision for it, and what you think some of the largest challenges we're still facing today. Hey, Brendan. Woo-hoo-hoo.
Hey everyone. So, in my defense, I was on a plane like 3 hours ago, and I guess it was snowing in Denver, and so we were just circling for like an hour. And I'm just like watching the clock, and I'm knowing, I'm realizing that I'm going to be late to this panel, and so I apologize to everyone.
Didn't miss much. We were just running through introductions. But yeah, I think a great place to start would just be, maybe you can introduce yourself and then talk a bit about what you think the right way to scale blockchains is. What's your vision for scalability long term, and what do you think some of the largest challenges that remain unsolved today are?
Yeah, sure. So I'm Brendan. I work on zk stuff at Polygon. I think probably like many of the people up here, I think that my vision for scaling blockchains is to scale them horizontally. So to allow a system to add block space to meet demand, like sort of without an upper bound, but to do so while maintaining unified liquidity and basically like if you think about what we're trying to do and what we mean when we talk about scaling blockchains, it's scaling access to liquidity and shared state. And so we can add like as much block space and as many like empty chains that don't have any liquidity as we want, and we won't be succeeding in that mission. And so I think, yeah, scaling horizontally, but not giving up composability and unified liquidity and shared state.
Alex, do you want to go next?
Sure, I think we will all converge on this vision because that's the only thing that makes sense. Like with the advance of zk, we want to preserve the properties that made blockchain valuable in the first place. We want to preserve decentralization, trustlessness, security against arbitrary powerful adversaries. And the only way to do it is to, and of course, like we want to preserve the usability. Like we want blockchains to be accessible by anyone. And that means if someone from one country, one place in the world has access to blockchain, they should be able to interact with anyone else. So the future we envision at zkSync is you have thousands of permissionless chains. Like anyone can launch a chain, horizontally sharded, meaning like all of them are being processed in parallel, all sequencing in parallel. They are modular, they have different approaches and like different layers of the stack. Some of them are having centralized sequencers, some are having decentralized sequencers with their own tokens, their own community rules, etc. But they are all connected to each other, they can all interoperate. Like a user of one chain does not need to bridge funds on the other chain to be able to interact with some app or like interact with the app chain on application-specific chain. You have your wallet, you have a magic experience of just like do one click, see exactly what you're doing there, and interact with any user, any other chain, and within like seconds, within some very short, like negligible amount of time, you will get the result. And it feels seamless, no overhead in terms of capital, no overhead in terms of additional trust assumptions. Like I think that's the only vision. Like I would call it the zk singularity, because all of those chains would have to interoperate through like aggregating the proofs and eventually settling down on Ethereum, and then maybe we generate the proof for Ethereum block itself, and then you have your mobile phone with your wallet that verifies in under 1 second the state of the latest block on Ethereum, completely with all its transactions and with all the millions of transactions that happened on the thousands of chain there in a single zk proof. I think this is fascinating, and I'm really excited for this future.
All right. I mean, I think we all kind of agree on, the way that it should be scaled horizontally. I mean, that's, what everybody in here pushes. That's including me, I guess. So literally everyone. I guess maybe we a little bit diverge on the ways we see this might be, the best way to do this. It's like, it's like on our side, for example, we kind of think that you gotta go from the first principles, and you gotta keep all those L2s, not just trying to make them go together back again. It's like via, I don't know, like just shared sequencers or something, right? But you gotta keep them together from the very beginning. You gotta make things start at one place. You gotta make things end at one place. But it shouldn't be, and it can be not. It's not enforced for things to be together in the middle of a process. So it's somehow similar to maybe like, I don't know, like a double map reducer or something. So that's like, the way. And of course, I mean, we do agree that it should be composable. We do agree that it should be like, for unified liquidity. And I mean, that's just, different approaches. zk sharding also like allows this. So, I mean, that's the thing.
So, as everyone said, linear horizontal execution, horizontal scaling. I just want to maybe add a couple of like also granularity of what needs to be still solved and what is currently not solved. And hopefully we will get around this table to converge on solution, which is we've been talking about how zk scale, but usually people don't really understand why zkPs tend to scale things, And the reason why zkP scales, AOL execution environment is because it allows you to separate between a powerful adversary, the validators, the sequencers, and you end users validating on your phone. So, and when people, for instance, compare Bitcoin to Ethereum and Solana, they don't compare the same thing. They always compare like Apple or Engine and a Ferrari. They are not comparing the same thing. Because Bitcoin's target machine is a Raspberry Pi. Ethereum target machine is MacBook Pro 2021. And Solana basically requires you to have a $2,000 machine per month. And so if you want, where zk comes to play is allowing you, validators, a set of validators to run data centers and still you being able to check on them, to check their integrity and validate that they don't basically fuck with you. And so the end game of this is also, as Alex said, a very heterogeneous environment of execution, where you have single sequencer, we have decentralized sequencer, you have environment without fees, you have environment with various mechanisms for fees. And my end game of like all the scaling is the following one. I always say the following thing, which is if blockchain is going to be the internet of money, then we're going to need web servers, web application capable of supporting native bridge, supporting what a wallet is, what an account is, what smart contract is, what an asset is, and at the same time run efficiently. And the only way to get there is what I call zk servers. At the end of the day, what we're going to look like, the internet will be running on a bunch of servers that would be just proving themselves to the blockchain to guarantee this non-custodiality, this trustlessness of the web environment a web of integrity that we wish for.
So I think something that would be great to discuss next, right? Like I think broadly all four of you, when you just spoke about your vision for how users should interact with blockchains in the future, right? You all mentioned horizontal scalability as kind of the approach. I think all of you in each of your respective ecosystems call it something different. Like Misha, you guys call it zk sharding. Kukovsky, you guys call it hyperchains. Brendan, I believe you guys just released, announced ag layer. And Louis, you guys have talked about L3s for the longest time, right? I'm curious, to everyone, you all use the word horizontal scalability as a way to solve kind of this state fragmentation problem in the future. Like, what are some of the trade-offs that you're thinking about as you think through all the different kind of approaches you can take to kind of arrive at this end game, this vision that you guys are all working towards?
Really good question. I can share some challenges that we have with hyperchains, and I know that like different teams are solving them in different ways. When you have fully sovereign independent chains connected in this zk singularity network, they want to bridge from each other in a trustless way, then to make the interaction like truly trustless, you would have to wait for the proof of the other chain to actually settle. But that means you need to wait for you have to allow for some latency of the proof generation on the other side. We want to bring this latency down to like under 1 second, and this is happening. Like the proof, I mean, you guys just announced a paper together, like on what's it called, like Plonky 3. Circular stocks, right? Like there are multivariate fields. There are there's a bunch of research going on that will get us like probably an order of or more magnitude lower on like proof generation costs and corresponding latency. But for now, we still have some latency, right? And so it's very tempting to do something like optimistic acceptance of transactions from other chains and say like, okay, you have like economic guarantees of validity on that chain, so we're going to optimistically accept it. You never can settle invalid state because you need to provide zero knowledge proof of validity eventually. But it could lead to reorgs, and we know that reorgs are painful. Like they are like a massive developer experience friction point, and like they basically like break projects if this happens a lot. And so like that would mean like if you want this to operate efficiently and avoid reorgs, all of those chains that participate in this like fast instant bridging network would have to be like kind of coming out of one hand, like be more centralized, right? Which would be a painful trade-off. So like this is one interesting, like I don't have an answer like what approach will win. We'll see, we'll experiment. But I have a preference for what I want to win. I want the sovereignty to win. I want like everyone to be able to have full control, full ownership of their chain and not depend on anyone else. And I really want us to avoid the situation where everyone is just using the same solution for whatever, like from the same like 2-3 providers, which is like a potential future which we could be ending up with.
Thank you. Yeah, so I agree with that. I think that maybe we have different views on like how you solve that trade-off, but I think that it's actually even worse than what Alex is describing, because not only do you have to wait for proofs to be generated, but you actually have to wait for the block verifying that proof to be finalized on Ethereum. And so like your minimal latency in the fully trustless case is actually like 12 to 19 minutes. And so if we talk on the one hand about defragmenting liquidity and creating this like composable environment, and on the other hand, we're talking about like users having to wait 12 to 19 minutes to submit and confirm a cross-chain transaction, that's not a very good or like a viable approach. And so that's the problem that we're trying to set out to solve with the AG layer is like, how do we allow chains to navigate the trade-offs that make sense for them between sort of like liveness guarantees and low latency while maintaining like safety. And you have this strong guarantee that's provided by zero knowledge proofs that when your batch as a chain is accepted by Ethereum, it is consistent with like the whole universe of other chains in Polygon. But I think like one other problem that's really interesting is like I think what Alex is describing is like a homogeneous environment for execution in sort of like a zk constellation of chains. But I think it's really interesting to consider like what does a heterogeneous execution environment look like, where one chain could be running like zkVM, one chain could be running Polygon Maiden, one chain could be running like some custom VM that's written in Rust. And like fundamentally, how do we enable that without sacrificing safety? Because the problem with that view of the world is like for every marginal virtual machine or execution environment that you add, you're assuming additional risk that there might be some soundness issue or some bug in that VM. And if you have this setup where all funds are pooled and you have unified liquidity, you're taking like this extraordinary risk by admitting like potentially less secure execution environments. And so like for us, the AG layer is an attempt to like offer a solution to both of these problems. Is how do we do cross-chain composability at super low latency, and how do we provide safety in an environment where we have unified liquidity, but we also have heterogeneous execution environments?
So interesting. So actually, I do have like a bit of a counter angle from the perspective of the trade-off, which is kind of like a callback to monolithic design, and not fully monolithic, but at least in some sense of this word of where everyone learns its own chain is phenomenal for scaling, of course, but it does bring a lot of issues. One of them that was Brandon wrote is what state fragmentation, which what other people tend to call liquidity fragmentation. But more than that, there is also a huge UX issue coming from it, because when you launch a new chain, then how do you get included into the block explorers? How do you get included into the wallet, the portfolio manager? How do you get included into all the stack of tools around the chain that makes the experience of the user easy, understandable, easy to use, and so on? And so, while I do see a lot of benefits to this sort of like vertical scaling through layering and through independent chain and cross-chain communication, my end goal personally is to bring back a way to get this execution sharding within the same environment than the base layer, the L2 itself. And zk can allow you to do that. And one thing that hasn't been touched also right now that has been solved so far by zk is all the state issue. We have the question of data availability, the question of state group, the question of state fragmentation. And so I think at least on the Starkware front, one angle we're looking at is how can we use this magical technology that is zk to get all of those into this single synchronous environment and not losing all these infrastructure benefit that you want to have when you launch your chain that you might not have if you're a small player.
So you're effectively proposing just setting up like one sequencer for all the L3s, and no, thank you. Thanks God. Thanks God.
What I'm suggesting is we can probably do better than just like layering on top of layers, and where you can have within the same synchronous environment things happening independently in the style of Solana, but in a way that is much more trust minimized than what Solana does.
So it's like, okay, I mean, all right. So the trade-off, it's like, I see trade-offs. I mean, I kind of do stand closer to maybe Louis' position in here, because, you know, like, you can't just, you know, like, use layers upon layers upon layers upon layers, because that's what we tried to do, and that's what led us to the position where we are. I mean, that's troublesome. So, I mean, the trade-off, for example, which you get when you try to, you know, when you try to apply the horizontal scaling, I mean, like, just having like shard after shard after shard, maybe like considering ETH is just one of the shards, right? I mean, it's effectively just one of the shards, right? So very expensive, yes, but okay, whatever. So that's the thing. And the trade-off in that, I mean, yes, there's a trade-off that you gotta prove all the shards to, you know, some kind of consensus shard, like eventually. Maybe it cannot be like consensus shard and ETH can be like two different shards. I mean, you can prove just a consensus one and then prove one to ETH, which effectively turns into aggregation. So that's the thing. And like, you know, with like bootstrapping new shards, it kind of turns into something like, into something like, you know, like just one more and one more and one more shard, which is at some point, it will not be possible to figure out which one was the original ETH. I mean, it's like it's going to be just a set of shards, and you will not be able to figure out which one was original ETH. I mean, it's going to be just, you know, differentiation in costs. I mean, and you can submit, like, for example, transaction to any of them and get that executed on any of them. Troublesome, several hops, sequencing tricks, operating with ETH, the original ETH directly might be a little bit expensive because, you know, you got to play by the rules, right? I mean, you can't break the rules. So these are the trade-offs. But, like, I mean, yeah.
So I think one other thing, well, I think what's interesting is none of you mentioned the word atomicity. And so I think one thing that, you know, people, at least on Twitter, have been talking a lot about, and certain people at, you know, the Ethereum Foundation have been pushing, and some of the other, I think particularly the non-zk rollup ecosystems have been exploring are shared sequencers, right? And I think a lot of the conversation around that is how that enables atomicity. Seems like for all of you, you don't think that the trade-offs that you get from from getting atomicity are worth it, right? So I'm curious if you guys could talk a bit more about why that is.
I actually like atomicity quite a bit. I think like one thing that's been sort of interesting for me to learn more about is this vision for shared sequencing and proposer-builder separation. And so my naive view of shared sequencing was, oh, you have this consensus mechanism and it accepts all of the transactions and it orders them, and then it's forwarded on to a prover and it generates a proof. But actually that's not the view and the proposal for what shared sequencing is. Like shared sequencing should be seen as basically granting the ability to propose blocks for chains at particular slots. And this is actually really interesting because you can know ahead of time who the proposer for a particular block will be, so who the sequencer will be. And so that proposer can coordinate with a block builder that can basically leverage all of the benefits of centralization. They can be in a data center, they can be super parallelized, they can be like a very professionalized and like high throughput, high scale entity. And this allows us to offer atomic guarantees across a large number of chains because you have a builder that can basically guarantee that transactions can execute successfully. And then that guarantee is obviously proven with a zero knowledge proof. And so, I mean, to me, and I think this gets a little bit at what Louis was talking about, like it's sort of an interesting view of the world in that it allows us to provide or preserve all of the properties of decentralization that we like, while also leveraging centralization for much, much higher throughput. So.
I have a strong opinion, which would be unpopular. I think that you indeed get all the benefits of centralization because it's essentially a centralizing solution. So, like to me, they shared like the multiple rollups with shared validity sequencing are essentially one rollup with multiple shards. And like, but if you want to do like cross shard transactions and you want to be them to make them atomic, you have these cross logs. So you eventually reinvent something like like Solana's approach to just like let's give up decentralization. We have this one powerful sequencer, and we will be able to process like more transactions than anything else. And this is a viable approach. But like if you want to go down this route, why build a Goldberg machine of like and the decentralization theater of many chains? Just build one centralized high throughput chain with validity proofs, with maybe some things that prevent censorship with like some time-long encryption. But like, don't play the theater. Just say it straight out. Like, we have a solution with all the benefits of centralization because it's a centralized solution.
No, I don't think that's an accurate view because you're not like there is not like an enshrined operator of that chain. There is like a marketplace that's permissionless and where hypothetically rent seeking cannot occur. And so you do have this benefit of decentralization where you can't get capture and you can't have like the enshrinement of a rent seeker or rent extractor. But at the same time, you get and you don't need to deal with locks because you have a builder that's actually executing transactions on all chains concurrently. And so, I mean, I think that we should ask like decentralization for what? Like the goal of decentralization is not to like perpetually limit scale so that we have like a ton of rollups and we don't have atomicity. I think the point of decentralization is like an instrumental good to ensure that we always have market structures that respect users, where rent seekers and monopolists like cannot basically achieve a privileged position. And so I mean for me I think that there's like a much broader design space than I think sort of the stereotypical decentralized rollup with a sort of logically partitioned sequencer.
I tend to also disagree with you, Brandon, on this one because so you're saying that first of all, I do see a big issue of in this shared sequencing environment about the most popular staker, the richest staker, the most Lido basically, being basically in charge of having even more power because they would control most of the blocks and therefore most of the other block of the other chain, which means that that's a very concentrating force inside the system. When, at least on Alex's point, at least enshrining this to the entire system makes more, it's like a more...
efficient.
Efficient, more fairer, I would say even a fairer approach to this shared sequencing, this shared environment. And what's baffled me so far, especially in the shared sequencing environment, is the claim I keep saying that also we're talking about multiple type of proof, and like then now he has a question of coordination of the system themselves. And finally, this is where it doesn't make sense to me, I have to admit, is in the case where you want atomicity, it tends to be for very time sensitive and operation. Otherwise, it can be asynchronous. Why do I care so much about being run in exactly one operation, fail or succeed, versus withdraw and have a continuation from there? And that places only makes more sense in DeFi kind of operation or financial operation. And then, like, what's the UX of it? How can I, how does it work from the user perspective? How do I make sure that my transaction will be front run, MVV, whatever, in this environment by this centralized entity?
So you're saying why? So I think that there were two claims. The first is that shared sequencing is unfair in some sense to rollups because they basically have to cede this economic power to.
It's unfair to users because it creates a centralizing force which will lead towards stronger centralized actor. Like the winner takes all.
Yeah.
It's like you're defeating the very purpose of Web3. So like if you feel like, how many guys have you read the Read Write Own by Chris Dixon? Oh, few hands, but like it's a really good book, and he walks you through the history of the internet and explains why we need Web3. What is wrong with Web 2? And what's wrong is, think of Google. Is it a monopoly? Obviously it is, right? It controls like 99% of like search, email, whatever. Is it, is it a monopoly because it has some like power, some special authority from the state? No, it just like there were incentives in place that made it possible for this monopoly to exist and capitalize on your data. And they control your accounts. You don't own it. Like they decide what you do. If they want to exclude you, they just deplatform you, and there is nothing you can do. They can do it without due process, without your ability to claim, whatever. And we want to avoid that in Web3. But if we create the same incentive structure where people are like when like a monopoly can naturally occur and control everything, and like if they don't like you, they can exclude you, or like they can change subtle rules of the game to favor slightly certain players and create better positions for them, we will end up reinventing the same Web 2 story. Like we will just recreate the same structures and the same problems.
Who do you see as the monopolist in this?
The proposers, because you will eventually end up with like one or two proposers.
I mean, which we already see on ETH. I mean, Rocket Pool, Lido.
Or builders. I always mix them up. But like the guys who create the blocks.
Builders. Yeah, but it's I mean fundamentally it's a permissionless marketplace, and like if you're able to create blocks.
But it's not, because you sell like it's not really like it. Just
no,
like
the proposer will accept the block that gives them the most economic value.
Look, the problem with this approach is you force everyone in the same solution. Like you say, sure, you don't need to use Google or Gmail for email. You can go with like any other provider, but then all the websites only have like login with Google button, right? So like if you don't have a Google account, or Apple account, you're effectively excluded from like a convenience of like single sign-on.
But conversely, but conversely, if you don't participate, like if users are getting a better deal from shared sequencing, if they're getting better UX, if they're able to access more economic value because liquidity is shared, then like by not opting in, you are imposing a cost on your users, and so like.
But it should not be. We can design systems that are equally usable, just without shared sequencing, using the ZK proofs.
I have actually an extra point I want to make about this to my idea.
Oh, yeah.
We're ganging up here. We're ganging up.
So disclaimer. This is Justin Drake's proposal, and so if you argue against it, you're not aligned with Ethereum.
Brendan, you're right. No, but like there is another thing that upsets me with like, the shared sequencing environment, which is like it sort of completely gave up on solving MEV to whatever. By MEV, I mean like all the front-running type of MEV, and that upsets me very, very much. It's like the fact that we normalize the idea that transactions should be visible ahead of time is highly problematic to me, and this is
no. I mean, you can So are you saying that with like threshold encryption, you don't get the like the scale benefits of?
I mean, the thing is like so for people who don't know, like the only, I mean, at least my perspective, the only true way to solve MEV, at least to some capacity, is ordering without execution. So for those who don't understand, just very clearly, blockchain are just, consensus is just about which order transaction happen, and not so much about actually what happened in them. And I won't get into the detail here, but if you could encrypt a transaction in a way that only unlock itself at finality, which what would be possible in the context of single shard finality, meaning the second I get included, the transaction itself reveal itself after finalization, then there is no MEV in the sense that we hear about today. Liquidation would still happen, and that would still distort MEV, but you would still don't have MEV of the sandwiching attack and all those sort of things that are nefarious to the system.
I mean, come on, it reduces the MEV. It doesn't eliminate that. You can't eliminate, like, you eliminate sandwiching attacks and that's it, but like everything else, like front running, no, of course not.
Front running is...
Yes, front running you can solve it.
It solves, yes. Like,
It's
because you cannot see what you don't know who you front run.
Yeah.
You don't eliminate all kinds of MEV. That's my point, I would
Correct.
say.
You eliminate the most harmful type of.
Yeah, I mean, with all the love for Flashbot, they did this marvelous thing of mixing benefit, like normal MEV, which is like liquidation, with nefarious MEV, and then claim that it's all the same thing. They cannot be solved at the same time, and that's very annoying. There are such a thing as front running. It's forbidden in traditional market for plenty of reasons. It should be also prevented from technical perspective in blockchain. We just gave it on that so far, unfortunately, in my opinion.
Yeah, I mean, I would say, I would say that to your first point. So your first point was that like lack of fairness, and then whether atomicity is actually useful to users, and I think that that's just something that like the market will determine. And if in fact atomicity is good, and if it does present like a meaningful benefit to users, then I think that there will be like a market pressure to use shared sequencing, and like I don't think that we can run away from that because we're already seeing momentum to support shared sequencing on Ethereum, and so I think in some sense, like if it is in fact better for users, then it's inevitable, and
Here goes not so hot take on shared sequencers, all right? Shared sequencers being not deeply embedded into the protocol are just another L1, like for real. And using shared sequencing without having it designed being deeply embedded into the protocol, like from the first principles, just from the very beginning, you effectively reduce the security of the whole system to just this L1 more L1 security. So it's like, anyone wants that? I mean, yeah, so, I mean.
So I think this has been a very interesting discussion on, your views on around shared sequencing and like what the right approaches are to maybe take here. I think at the end of the day, developers are going to choose what makes most sense for their application. I think one thing that I've been thinking a lot about is also, okay, you have shared sequencing. That seems like the option today that can, get you something close to atomicity, right? But I think long term, and you all alluded to this earlier too, as the length of time it takes to generate a ZKP keeps coming down, and the cost keeps coming down, right? If we can get to the level where you can generate proofs within like a second, maybe even like milliseconds, then I think for all intents and purposes, for a lot of developers, it doesn't actually matter or not whether it's truly atomic, right? So, like, I think on that note, something I wanted to get all your takes on, because I think the fact of the matter is most developers today who are building a rollup, they are choosing to go with, optimistic rollup stacks. I suspect, and I'm open to hearing, your views on this too, like, one of the reasons for that is just ZK is still a bit expensive today, right? And I think on this point about getting the cost and the latencies down, that's going to take some time. So I'm curious if you all have thoughts on, how much left do we have, like, how far do we have to keep going? When will ZK truly get to the point where it's economically, like a no-brainer for developers, right?
So like if you open growthepie.com, I think, and look at transaction costs, the zkSync is by far like 50% cheaper than all the optimistic rollups already today. for like average transactions. So this happened like since 2 months, and like I think the reason why ZK has not yet taken off is because there was a period of like warming up. You know, like when optimistic rollups launched, initially they had a lot of developer friction. Like things worked just slightly differently. There were some inconveniences, some tooling did not pass. It took a while, like took approximately a year for Arbitrum to polish the experience and make it really mature. It took a bit longer for Optimism. We're experiencing the same thing. Like we did not have some basic tooling and some basic things available on zkSync. It's not like EVM equivalent rollup yet. You need to recompile, but things work now, and like we're I think like 95% there, and we're solving the last miles. But you're right. Like costs were a major factor. Like they were more expensive than optimistic rollups. Yeah. That's not the case anymore. At least one ZK rollup is cheaper than optimistic rollups. You can check it for yourself.
I will agree with Alex, and right now he's right. They are cheaper than every other L2, including Starknet. And because they launched their very great boardroom with compression, which I fully congrats you for. It was very impressive work. But more, I mean, to go back to your point about like why people still just tend to favor optimistic rollup. There is, my perspective, there is two answers to this. The first one is we are still talking at this stage with the same builder that we have lifecycle. Like I haven't seen yet truly new things, truly new application that has been coming up in the last 2 years. And regardless of the tech stack, and I'm not going to even talk about Starknet and Caro and all that, just when you look at what's going on in the market, we see a lot of new projects coming up with new incentive mechanism, new ways to do things, but the core of the product hasn't truly changed. And so I'm expecting that in this new bull, we're going to see new things, things like on-chain gaming, or things like advanced cryptography for Oracle, things like Herodotus, Axiom, do storage proof, all the ZK coprocessors, all of that is getting to market. And the implication of their outcome will finally arrive. I mean, will arrive soon, and will be native. I mean, as a native base home in the ZK rollup world. Because if you want to verify proof, I can tell you that ZK rollup are the right place. If you want, ZK rollup are the chain for proofs.
Especially ZK rollups with state divs, because you don't have to publish the proofs. But I want to say that we actually see really interesting use cases being developed in, at least on zkSync, in the ZK rollup world. We have, for example, Quark ID, the project we're doing with the government of Buenos Aires, where they just, on this Friday, they open sourced the platform. It's a platform for self-sovereign ID, where citizens can control their ID. Like they don't trust, like, you know, they don't delegate it to governments. Like the government actually like gave it to them, and you can use your identity on zkSync with Quark ID to like access goods and services and like governmental things. And they're now expanding to Mexico and Colombia. We're seeing things like tokenization of real-world assets. You know, like we're working with traditional institutions. It's taking them longer time to warm up. Like they take years longer than startups and obviously than crypto-native folks, but they're coming there. We're in conversations with banks, with central banks even. They're coming there. They're building things that are coming to, you know, like they're gonna like on-chain the traditional finance, and they will only use ZK rollups. They are looking beyond marketing hype. They are looking into the essence. What's the most secure technology available to us? What is the technology that gives us privacy and yet interoperability with other systems? Like that my bank interacts with other banks, but I don't want to disclose the data of my customers. That's only possible with ZK rollups. So like, I think the ZK revolution will actually unlock the full potential of Ethereum, and this is already happening. Like we can totally see it.
And I mean, I was more referring to optimistic rollup-based project I've seen, at least not without dissing anyone, just to be clear. And to go alongside on the Starknet front, a new application that has been very exciting. There are multiple dimensions. People using the language. So Starknet has this Caro language, is optimized for proving, but also now also looking towards privacy. And so you have a team right now called Giza, which is presenting a workshop around here. So where you can see how they're using this new language to make zkML, provable inference of machine learning model. And on-chain gaming, once again, what I'm trying to say is the stage where we see project taking advantage of what zk allows is rising and not fully there yet. When it's going to come out, you're going to be surprised of the new application coming in.
It's like you kind of touched all the points, I would say, except the points for which all of those rollups we're building are there. High performance stuff. I mean, it's like it's like managing the block building, for example, or transactions operations over high performance rollups, or it's like kind of Suave style, right? Just not an L1. So that's the thing. Or it's like perp exchanges. I mean, like the most. It's like the most usual thing.
So it didn't get the question quite.
I mean, it's like you mean you gave those examples. I mean you gave those examples of apps. It's like which kind of are kind of still possible on ETH. Just a little bit more expensive, but still possible in there.
Well, I think it's prohibitively expensive on layer one. Like the costs are a factor. Like if a transaction fee costs like $10, you cannot buy a coffee with it, right?
I can give you a very good example on Starkware has been having StarkX, which has been by far in terms of volume of trade happening on the net on the system, the most successful zk and even per environment in crypto. With DYDX we did $1 trillion of volume, with Apex, with Brine, with all the other one now, the volume also flying. And those applications could literally not have been built in any environment that is not zk based. And the reason is actually quite simple. The reason is those applications cannot live in fee-based environment, in an environment where they have to compete for block space. And so this is a bull case for those zk servers, those centralized app chain, where I can define my own fee mechanism or maybe I just don't take any fees because I have other DDoS protection, and I know that I'm going to make money in average of all the things happening in my system. No, I'm talking. No, it's an L3. So Paradex, for instance, right now is running a Starkware app chain. They did 200 million volume daily, I think, lately. Why they use an app chain here is, or a private app chain, is because they are protecting themselves against DOS through regular Web 2 solution, meaning IP filtering, rate limiting, and so on. And they can allow their user to trade, to accept a limit order, to cancel limit orders without fees, because that's the biggest hurdle for a centralized order book on the blockchain. And they know that in average, all the settlement that's going to happen, they're going to make money. And so they don't have to price actual transaction fee at every transaction. But the environment itself is the same environment that if you were running on a public network.
That's a tricky combination.
I mean, that's actually, for me, that's actually what the end game of those L3 looks like. Centralized, non-custodial environment that understands what a smart contract is and can run without running fees for your specific application. And just I would even argue just to make the bull case for L3 is actually this one, which is cheap is never cheap enough for every application. You will always be, if you have an application that requires to be cheap, there is always something that will price you out at some point if the block space is limited. And you need an environment where you can control what's going on.
But so here's a slightly spicy rejoinder to that. They don't need to be L3s, right? Like you could have L2s where we do proof aggregation and there's no dependence that they settle on an L2.
So it comes down to semantic. Basically, what you're saying is ag layer versus settling proof on an L2 itself. In my opinion, it's actually better to do proof submission on a public network because it's asynchronous and I don't need to co-organize on which order I need to send my proof. And if I trust the L2 itself, I just can trust what's going on the settlement itself. Like it's now based on trust assumption of the consensus mechanism of the L2 versus the L1, and it's at this point it's kind of semantic and like what level of atomicity we're talking about.
Well, but the problem is you can't have, like, it's much more difficult to have cross L3 transactions for L3s that are settling on different L2s. That's just like...
So that's true. That's true, but I think it's literally, honestly, it's isomorph. Between, like, it's like basically you can probably draw the same sort of operation between settling your proof and directly executing a transaction to the other environment versus coordinating everything in a single proof. So what I'm saying, like, for instance, let me give you an example. Paradex, let's say you have an L3 that's settled on Starknet, okay? They send the proof as part of the state update of the execution of that transaction. A transaction is automatically emitted on behalf of the user. And this transaction directly deposits to the L3. That's equivalent to aggregation.
Within a single L2.
Within, assuming, within the same environment.
But I do think that we're sort of like the nice thing in my opinion about the ag layer is that there's not a contention for block space and for resources that you run into on an L2, because on an L2 you're not just aggregating proofs or sort of being this settlement layer for L3s. You also have transactions and smart contracts that are deployed directly to the L2, and so I mean, I'm not sure we're going to resolve this.
No,
here,
so you can argue in this case that, like, and this is a Solana bull case, which is parallelization through like parallelization at transaction level. When you, I'm not saying the full access is the way they do it, but like at some level of parallelization gives you solve the block space issue while becoming
you can build the transaction dependency graph, and those settlements will all be isolated from the rest.
Exactly.
But you're still contending for network resources. With the ag layer, not every validator on the ag layer even has to download or receive every proof. This is sort of the nice thing about proof aggregation.
But there is now a coordination requirement between the two L3s to know that the message was sent from one to the other.
Yeah, of course, but you're going to have that, you're going to have some coordination.
Yeah, but they don't. So in this case, it actually don't. They just the L3 itself can the other L3 doesn't actually just have to look on the L2 as opposed to actually talking to the other, the one that's sending the message itself. But I think we're digressing. I think it gets too semantic at some point.
Guys, this has been an interesting discussion, but I think we also want to give the audience some time to ask some questions.
Sure.
Does anyone have any questions they want to ask? Or
so actually, I want to revisit Yuan's question, because his last question is about the cost of ZK being high. Do you think that with things like technology advancement or hardware acceleration, this can be practical so that people will be thinking about ZK instead of optimistic?
Yeah.
What do you guys think?
So
all of you guys invest into ZK hardware companies. So
yeah. So it's interesting because I think everyone on this stage has been working on ZK for a long time, but my personal experience was starting a ZK project in 2019 and being extremely nervous that we were raising money and the technology was not ready for what we wanted to build. And I think that everyone on this stage has gotten very lucky that we entered the technology at a time when it was increasing in speed and performance and efficiency exponentially. And so I think it's fundamentally just a mistake to ever bet against technology. But I would just echo Alex and Louis if you look at transaction fees currently on L2s, they're extremely competitive with optimistic rollups. There is a question about whether proving costs are being included in these fees. But I think what this argument misses is that optimistic rollup users, they aren't just paying transaction fees, right? Because the 7-day withdrawal delay imposes capital inefficiency on the users of optimistic rollups. And so if you try to quantify this capital inefficiency and you look at the aggregate fees that users have paid to third-party bridges, it's like tens of millions of dollars to avoid the 7-day withdrawal delay. And so if you compare that with the cost that it would have taken to prove every single transaction on Arbitrum or Optimism. We just released a type 1 prover. We could generate proofs for Optimism and Arbitrum tomorrow. It's like orders of magnitude less. And so optimistic rollups are already extremely cost prohibitive. And we haven't even started talking about like their limitations in cross-chain and composable settings. So I mean, to me, like the debate is no longer really ongoing.
Just to add to that, I would say regarding the proving cost, it's like eventually it is going to be priced into transactions cost on zkL2s, like for sure. The best way maybe to reduce that is just, marketplace, like market dynamics, like, something like this. Just apply that to proof generation and you're good. It's like if the hardware comes up, sure. If it doesn't comes up and there's like a lot of software implementations, a lot of software optimizations, sure. I mean, just apply market dynamics. It's like the market will solve it all. You don't believe it.
Yeah, and like the proof being expensive is a meme for all capacity and for a very, very long time. And I think all of us can just attest for it. Like it's been a meme for like 2 years at this point, and the meme that's been pushed by VCs to justify funding hardware companies. With all the respect I have for hardware companies, which I appreciate, we just released a new paper called Circus Stark, literally last week, and Plunky 3 and a bunch of other announcements coming up. Just say that the improvement at the research in the software level already. I mean, there is so much to improve just right now that this claim of, oh, it's going to stay expensive forever is just like mid-curve completely.
I think we might have time for 1 or 2 more questions.
Hey guys, that was a great conversation about shared sequencing. I tend to agree with Misha that shared sequencing is basically creating a new L1 because you're recreating consensus. Another thing that you could do is that just use a faster L1, and I'm specifically talking about Monad, which is going to be copy-paste with Ethereum. So how do you guys view Monad? Do you think that you could see yourselves having products moving to Monad as rollups?
I can. So Monad is doing optimistic parallelization of transactions, and like this way they can process more, or they claim they will. We will see how it plays out. They're not live yet, but you can totally do the same thing on any other L2, right? Like there are way more high-load system engineers in the world than there are ZK researchers. So like that's like a lesser bottleneck in my opinion. Like we will all add that eventually, like some sooner, some later. It makes sense, right? And then we can prove all of the transactions in parallel in batches with zero knowledge proofs. Like they are basically infinitely parallelizable. So I think Monad will compete with Ethereum for the mindshare and for liquidity and like for decentralization. So yeah, it's like in layer 1 category, whereas L2s will be able to offer the same thing.
I would even say that the question is, will we settle? First of all, Starknet specifically, for instance, we are working right now on Block STM, which was invented by Aptos, right? Yeah. Block STM, and so whatever Monad is doing, all the L2s will do it at some point because there is no reason why not. As now settling on Monad versus Ethereum, never say never, but at the end of the day, it's a question of, like, crypto is not just AWS versus GCP. It's not, otherwise we'll be settling on EOS or Solana or whatever chain that might be relevant. There is a notion of who you cater to and which community you cater to. And like Monad has a very uphill battle to prove its credible neutrality and attract the user base before I think any of the established L2s we think before moving there. But never say never, like someone may just take the stack and deploy there, and good for them. Like, it's a permissionless at the end of the day.
I mean, it's like mentioning monad, you're effectively trying to, just, write like a piggyback on the parallelized EVM meme, which is, I mean, of course, like parallelization on a VM level, sure. I mean, just sit and do it. It's not a big deal. It's like at zk sharding thing, we've done much more than just, like EVM parallelization. It's like data parallelization, not just computation parallelization, but also data parallelization effectively, because you just to avoid locks. I mean, you kind of asked like some time ago, by the way, about, like what's the point of like doing a damn sharding, just settle a lot or whatever, right? So it's like my point is data locks, state locks. I mean, like it's like data exclusivity access. I mean, you effectively get a locked a particular index when several users access to that. So you need to prevent the locking of that, just the whole thing, just putting the whole thing on pause. You gotta like, shard that thing, just split the data, and that's what makes it different from, like Solana and things. That's what it makes sense, and it keeps it decentralized. So why not to use like, a better L1? I mean, better L1 still has like, first of all, it's like, what's the better L1, all right? It's like, it's just different design. Second of all, it doesn't mean that there are, there are no such problems which ETH kind of encountered already. And the third thing, I mean, protocol design, I mean, sure, it's like decentralized rollups will all have their own kind of protocol. I mean, we have it like, from day one, guys will achieve it. All of them will get their protocol up and running, of course, as well. So it's like, it's much easier. It's not that big. It's not that of a big deal, as So.
And one last thing about the monad versus EVM or Ethereum. Parallelization, I mean, the current problem of scale on Ethereum is not execution, it's state. So the only thing monad will achieve, if applied on the Ethereum state, will make computation cheaper. The state will still be super expensive because it's a shared. Yeah, because it's growing. It's single threaded at this point. There is no like access list or other mechanism that is going there. It's still going to grow. And I mean, I would love Ethereum to be parallelizable. It would make Stark proof much cheaper. So please do. But other than that, I don't really see the advantage of the narrative behind it. Like outside of being a cool feature on top of the network.
I think we're at time, guys. Thank you for all joining this panel, and thank you for your thoughtful questions, guys.
And just one last thing, guys. I got a bunch of really interesting zk Quest things. So like you can find me after the panel, and you can win all of up to several hundred USD just by passing the test, the quest, and it's pretty fun. So and a lot of cool swag that you can get at our booth at ETH Denver.